Welcome to Accounting 360, Accounting Systems. Let's talk about the exam number 2 coming up. So I want to backtrack a little bit and talk a little bit about, it seems like a strange course maybe to some of you, and what are we studying and why are we looking at business modeling and that sort of thing. The first couple of chapters kind of go into something about how accountants are, advisors and that sort of thing. I've been teaching AIS for 10 years, and it's changed a lot. And in some ways, it's one of those courses that sometimes can feel like it's lost a little focus, but there is a good deal of what we cover in this course that somehow is in the CPA exam, although the CPA exam has been updated, and we don't have new textbooks that cover the IT portion of it. And so we're kind of talking about that, but as you can see, it's called information systems. And so what are we looking at? In times past, how I've taught, or the things that we've taught in accounting information systems, is if we look over here, that we did some practical work. In other words, we would have a big project for about a third of the term where you would buy a practicum, basically a practical work package, to where it'd have a bunch of fake receipts, invoices, bills of lading, bank statements, and all these sort of things, to where you would have all this real world paper documentation, and then you'd be required to fill out the subledgers and the special journals and go all the way through, completing the end of period reporting and completing the financial statement. So a lot of paper ledger work, but we don't do that as much anymore. We do everything on computers. And so that has kind of gone by the wayside, even though I still think it would be useful for people to do that today. And I've thought about doing that in the future. Used to be we did a lot of Excel practice, trying to do cash flow statements. Well, we did that with the first case study. But you have your own Excel spreadsheet course, so we don't do that as much. And so what are we trying to do? We look at this business modeling, we look at some database work, some ERP knowledge, and we talk a little bit about internal controls towards the end of the chapter. So it's a bit of a hodgepodge, but I want to kind of frame it in for you, at least my best guess, because I don't think the textbook does a good job of drawing out how does this fit? And that's the title of this first part, is how does this fit into your accounting education? So many of you have already taken auditing, or in the course of taking audit 2. And you remember we talked about COSO, the Committee on Sponsoring Organizations, basically the groups like the AICPA, et cetera, that got together and came up with governance guidelines, because the government had gone in and said companies need to do better about managing their business. So what were the 3 basically legs of this stool of COSO? First of all, from the company's point of view, they were supposed to implement systems that help improve operations. Well, companies already naturally gravitate towards that, right? A lot of things that they implement is to make their operations a little better. The second part is, let me move this over a little bit. Second part is, preventing fraud and providing secure reporting, basically the audit trail for financial statements, so that when a company gets audited, what do auditors do? Well, the auditors really focus on this second part of COSO, which is, do you have the type of internal controls implemented to be able to have, reliable assurance that you are reporting correct numbers to the public. And so even though that's only one of 3 things that companies are focused on, it is the thing that audit is focused on the most. So essentially what we do here is we look at coming up with internal controls or business processes from the company's point of view. And in audit, we then say, well, let's test those business processes, specifically the ones that are focused on internal control for financial reporting. And then thirdly, there's a lot of businesses that have compliance with that have compliance issues that need to comply with regulations, whether you're banking or healthcare, or, you even got to get a certificate to be a hairdresser, I think. And like California, there's kind of a big stink about this, that it takes a long time to get a certificate for something like that. Anyway, So if that's the three things that go into what a company is supposed to, what is good governance for a company, let's kind of match that up with the three main areas of CPA work. Well, we know about tax, and we know about audit, and we know we've got classes specifically for that, and a lot of you do internships in that. But what are CPA firms really? A lot of them are, I guess, what are they proposing or what are they trying to highlight as being their main expansion area? It's almost always business advisory that they're trying to say is their up and coming thing. And for those of us in audit class, that we look at, that's where a lot of fraud comes from, that the audit work gets compromised because business advisory wants to make a buck and they kind of run roughshod over audit. But as junior accountants, you may not have a lot of ideas or thoughts about how can you join a CPA firm. What are you supposed to do about helping with business advisory? Doesn't that take a lot of specific industry knowledge? Well, let's take a look at, and I've used this example, or at least this bit of data before. Let's look at business operations. I was looking at some numbers to where and this isn't recent, probably it's a couple of years old, but they were saying a small business under 100 people, that the average amount of fraud for one of those type of small businesses is around $130,000. But you jump up towards a medium to sort of large company, greater than, I don't know, was it 1,000 people or 10,000 people, something like that, to where if the small company, the average amount of fraud was 130, the medium-sized company was about 135. It wasn't linear. In fact, it stayed almost the same. And the reason why, I think, is, whenever we study internal controls, we're talking about segregation of duties, and we're having, different types of physical controls or access controls and all these things. And when you're a small, scrappy startup, you're thinking, I want to do more with less. I want to have fewer employees. I want to have less overhead, less costs. And you don't realize, and I think that the fraud numbers kind of point this out, when you're a small company, if you don't have enough people to fulfill all of these internal control or business process positions, then you open yourselves up to fraud. In fact, it may even seem like you need to get to a certain critical size before you start losing a lot of money due to fraud. So a lot of smaller businesses, and if the numbers for the medium-sized company was under 10,000 people, you would say they, 100, well, you'd think 100, a company with 100 people, that sounds like a big company, but it just lacks the critical mass, depending upon the type of work they do, of course. They lack the critical mass of people for proper systems. And so I think this is the area where we say, how does AIS fit into your accounting education? Well, yes, you could become a very, focused person on an industry. I mean, in fact, maybe I'd say you start off with an industry and you start to learn the operations, and you would learn the accounting and the rules and, the different, like when I worked at Texas Tech, we had classes on oil and gas accounting, right? Those were specific classes talking about a specific industry. And you might learn about an industry's accounting rules or best practices that way. And then to go even more in depth would be sort of compliance with regulations. And there's a lot of CPA people who do get into the nitty gritty of compliance. But I think the beginning point of business advisory is this section in the middle, to where, or I guess it's a combination of efficiency and effectiveness. You don't have to have a lot of specific industry knowledge to be able to set up a company correctly as it goes from a small to medium-sized company, right? If we look here, we just say, okay, if we look at COSO again, efficient and effective ops, that's some industry knowledge. Compliance requires in-depth knowledge, but fraud prevention, internal controls, common to most businesses, and most businesses are not good at this. They need help. So this would be where maybe as your first year or your first couple years in a CPA firm, to where you're put onto the business advisory group. Well, obviously you're going to be working under a more experienced person to start learning specific industry rules. Like I remember I had a friend who was a partner at a regional CPA firm in the Portland, Oregon area. And he said one of the other partners was retiring, and his big portfolio, one of the big pieces of his portfolio business that he was giving to the next partner was he managed, or he ran the accounting for a lot of used car businesses. And so my friend who is a partner there basically said, "Look, I haven't done the accounting for used car businesses before, and this guy's got several big customers that it's a good chunk of business." And so he had to get into a lot of detailed conversations about how he was going to understand and give good advice to these clients that were used car business people. And so obviously you get into a new section, you got to learn a bunch of new stuff, but at some level he had a core knowledge about, well, at a minimum, all of these companies, no matter whether they're a car business or a used car business or oil and gas business, they've got to have effective internal controls and effective fraud prevention. And as we saw up here, that going from a small to a medium-sized company, you just need that critical mass to fill out a bunch of roles. And so as a sort of beginning business advisory type activity, I think that's what this course really focuses on. It's easy to kind of lose sight that you're actually losing you're learning some business advisory skills, but I think that's really what you're doing. So let's frame in the chapters that we've taken away. And so here, my main takeaway is perhaps you can think of AIS as an introduction to business advisory services. And you need to start thinking about industries if you're going to go down this path. For exam 3, let me just kind of do some cleanup of the other things that are going on. For exam 3, that's the final exam. I dropped chapter 9 because it was on XBRL, which is Extensible Business Reporting Language. It's the language that the SEC requires companies to submit their 10Ks and their 10Qs to the SEC. Well, okay, that was a big deal maybe 10, 15 years ago. This basically the standardization of the digital reporting. Well, okay, that's not such a hot topic now, so I decided to drop that. And what do we have? We've got 4 more chapters. We'll have 13 through 15, which basically talks about AIS and computers and internal controls. And as you've noticed, all of these chapters are not super heavy, dense information. It's really just a survey of information. And then one of the other things I'd say about business advisory services, remember, managerial accounting is about internal reporting, not financial statement reporting. So we're going to end up with one chapter talking about a type of internal reporting, right? That's one of the big things about managerial accounting is you come up with your own type of non-GAAP reports to look at a specific activity to help you manage your business. And balanced scorecard is a common example. I wouldn't say I've done hundreds of balanced scorecards, but I've done, 10 to 20 balanced scorecards of various types throughout my career. I'd say probably less than 2 dozen, more than a dozen, less than 2 dozen, but somewhere in there of different types of balanced scorecards, just taking information, trying to put it together and show whether or not if we're measuring it, is it showing any improvement. Some other things, all homework is posted. I know I have the case study 2 as April 22nd. Let's just put that off to the last day of class. That'll be due April 30th. I'll put this information in a D2L post as well. Let's take a look at the chapters here. So just kind of, and why I have them in parentheses here, I've got chapter 2 and chapter 3. So we kind of, if I said we're going to learn a business advisory process for how to go through helping smaller companies get a handle of their internal reporting and their internal control and just putting down their business processes into documentation. So we start, it's basically these 4 steps. We're going to have business process, forget what the M and M are, but the business process diagrams, which basically take some verbal or not very well documented business process, and what we try and do is map it out with to map out the business flow, and it's to map them, to document it, to improve, find errors and gaps, to find maybe some conundrums where they don't go the correct way, or find out where maybe there's no decision being made, or if something's happening that's in a slow. And it shows communications and timing. So we first start off by just writing down who's involved, what is the communication, how does it flow, what are the timing and that sort of thing. Then we move to UML diagrams, and this is the one. What we're trying to get to is to create a database, right? A database that collects this information, allows us to access it, update it, keep it current, because we're going to be running our business off of these databases or this information, these information repositories. So we want to try and map out our current business process. We then want to turn it into a map that is set up to be able to be used to create a database. And while we're setting up these UML diagrams, we need to also consider business rules. Now, business rules may not have been initially thought of in the BPM diagrams, the business process diagrams. But going from business process diagrams to coming up with the diagrams that help us set up the database, we need to start thinking about business rules. And then once you have the UML diagrams, you then create the relational database. And that's where we are on this side over here. We're starting on chapter 4. I just covered 2 and 3 again kind of quickly to remind you that we're going to be using these parts as we cover the chapters. So I guess let me finish up. Is okay, if the 4 steps here are business process diagrams, come up with business rules, put them into UML diagrams, getting ready for a relational database. Well, then let's look at 3 different business processes using these 4 steps. They don't spell them out as these 4 steps, but that's really what they are. And sales, these business processes, these will be very familiar to audit students because these are the same ones that we use to do our audit of business. They call them in the audit book business cycles, right? But you notice that on the business account, the corporate accountant is setting up these business processes, looking at it from a collection of accounts that naturally go together. That's how managerial accountants set up these processes, and it makes sense then when we audit them, we're also auditing them because that's how they were set. Auditing them in the same way because that's how they were set up. So these match pretty much, maybe not as strictly defined as we do an audit, but these match up with how we define them in audit. Sales and collection business process, purchase and payments, and conversion. Well, conversion is just the manufacturing process, and we'll talk about that a little bit more when we get there. So you have these notes, and so I'm not going to go through them in super detail, but I just want to highlight, and I've got a couple of things here highlighted that I want to remind you. So this is the step after we've done business process. We've come up with business rules. We've put them in UML diagrams. And what's the outcome of all of these is to create a relational database. And in the textbook they talk about doing this in Access, and I have thought at Microsoft Access, I've thought about doing that as well, but I just don't feel we're set up to be able to do that, and it takes a long time. Well, it takes a lot of effort, and this is one of those things that would probably be either better done in person or something like that. So we're trying to set up relational databases. There are different types. The one that we're looking at is a relational database. It's the dominant one. They are organized in 2-dimensional tables. There's some definitions. So some of the basic principles where you got classes, attributes. Just remember, a record in a relational database is the row. That's like each individual customer, right? Each individual customer has its own row. The columns in these tables are the attributes. What is the customer ID? What is their AR balance? How many purchases have they made? What are the attributes? What is their home address? What is their billing address? Those are all attributes. Those are the columns. The records are in rows. And whenever we're setting these things up in the UML diagrams, we're specifically thinking about it as being a database. Here are some issues that we need to think about for a database. What is the primary and foreign keys? A primary key is uniquely identify this specific table. So like if you've got a table is called customers, Customer ID might be the unique identifier. If you've got a table that tracks order, order number is the unique identifier. And the foreign key is a link between the two tables. So if you've got an order table, maybe you've got an order number, and then somewhere down in the details is the customer ID. Well, the customer ID is not the unique identifier for the order, but is the thing that, if you want to find out who made this order or who is this order for, you go down in the customer ID field, and then you find out all the specific information. That's what brings you to the next table. There's a bunch of requirements. The most common type of database management system is called SQL, or Structured Query Language, or SQL. There are 4 basic database management system operations: create, read, update, and delete. They are called something slightly different, and SQL is its own version of a database management system. It's a very common one. SQL is insert is create, select is read, and then they also use update and delete. So sometimes you'll see one word versus another because they're talking about SQL or they're talking about database directly. Here are some optional things so you can kind of see what are some other, commands that can be given. And then we talk a little bit about how it gets implemented in an ERP system. And oh, heaven forbid, we talk a little bit about cloud computing. So I'm saying here, this textbook is showing its age. Tentatively introduces cloud computing. Now, this is a huge business over the last decade. Amazon Web Services completely dominated for a while. And then Microsoft, in sort of a strange situation, bounced back. They were doing not so well. And then they decided they would take a stab at taking Amazon on with web services. And they've done quite well. And Microsoft is kind of bounced back, much to many people thought Microsoft was maybe on the way out. Sort of like right now, you kind of think of, is Intel? Well, Intel's still pretty strong, but it's not as dominant as it used to be. Anyway, so that's 4. That's the relational databases. And then just think about the next 3 chapters are detailing a different business process. So let me spend a little bit more time on chapter 5, and then you'll see that chapter 6 and chapter 7 are very similar. They just go through it in the same way. So with all these things, remember when we did it in audit, we talked about what are the accounts, which is the primary account, what are the documents involved, and all that sort of thing. So we're talking about the exact same thing here when we're talking about information systems. So here we have sales and collection. That sort of all rotates around AR, right? Think about all the accounts that are matched up to AR. Well, that's sales on account. That's cash collection. Whenever you have allowance for doubtful accounts, if you have any sales discounts or sales returns and allowances, all of those things get touched upon by AR. Now, you don't see COGS and inventory as kind of a separate thing, but it's also part of the sales process. And remember, some of these accounts show up in more than one process, like obviously inventory and cash show up in more than one process. But what we're doing is we're looking at a bunch of activities that are grouped together. And as I mentioned before, in an audit, test these as a group. Here we developed the BPN, the business process model. Is it notation? I forget what it is. But just realize that the book has a very detailed, well, I wouldn't say very, a detailed example talking about a graphics, like a t-shirt graphics or what would you call a promotional item, sort of silk screening stuff. Activity. And so I didn't specifically talk about that business. This business is called Sunset or something. The silk screen company. Just realize that if you want to read it, kind of get an idea where they talk about all these things for a specific company, you can follow the example in the book. I've just kind of extracted, these are the steps that are going on. So here they develop the BPN activity. And so here, for example, for this, it is provide a quote, receive a quote, prepare materials, production, delivery, invoice, and payment. And then we look at, the model for the BPN. And so here in each of the 5, 6, and 7, I talk about a few different parts about creating a model. So just be aware, what are pools, what are message flows. This is a collaboration model, meaning you're showing not only your company, but you're showing another entity, another participant, And so here the two participants are customer and company. If you have a model that's just showing an internal business process, that wouldn't be a collaboration model. Some other things to the process, you can have a sub-process error and a timing event. Make sure you understand what those are. I'm not as you see from the quiz, there's no graphing involved in the exam. It's more just, again, it's a survey of this, I guess, these tools on how to start sort of business advisory. Develop the business rules. We got 3 elements: event, condition, and action. And then what we do is, if previously I said these are the activities, we then map them out in the BPMN. Well, when we start to develop a business rule, we're going to look at those activities, but what are we going to talk about them? We're going to talk about the access controls, about who is supposed to be doing this process, and sort of what is the time frame, or what are they authorized to do? No, access is who is supposed to do it. Sorry. Application is what does the system do? How does the system assist you or constrain you or check you on when you're entering the information? And there's 3 things for each of these, for each of the different activities. So we have provide quote, receive order, deliver order, invoice, provide. I think that is provide invoice. Sorry, or provide payment. I think the last one's provide payment, or receive payment. So here, receive order, authorization, and there's in the exam there's 2 of these. One of them is asked in the quiz, and then I'll ask another one. So just get in the habit of understanding kind of how these things get set up. An authorization is kind of not only who, but sort of what activity is authorized, or what is the proper authorized way of doing it. So here, receive an order, authorization must record the order within a narrow time frame, manager approves. So access controls, I've typically chosen access controls that says not who can do it, but who cannot do it. And basically this is kind of a segregation of duties type things. The order receiver cannot modify the product pricing. The order receiver cannot approve credit. You can't have one person doing 2 parts of a process that could potentially provide opportunity for fraud. Application controls are almost always stated in what does the system do? Do they provide a default value? Do they check the range and limit check, making sure it's not too big? Do they link it to other things in the system? Do they provide a number automatically, like an order number? So application controls are typically framed with what is the system doing? Access controls are typically saying what the person that's doing this process, what they cannot also do. And authorization sort of determines what are the authorized parameters of the job. Develop a UML model. Now, again, we could model the whole process and coming up with these multiplicities. That's the one-to-many or the many-to-many relationships. What I've done is I've taken for each of these different business processes, sales, collection, purchase, and payments, and conversion, I've chosen one one-to-many and one many-to-many relationships. And I've given you an example. And as you see in the quiz, I'm going to test your understanding of how to read it. Now, how you read it is you take orders, or you take whichever number, and think of this as having a box around it, right? And so the details or the numbers and the asterisks next to it are not referring to orders. Orders is the information about orders is where it intersects another box. So the one-to-one really has to do with orders. And so what you should say here is always say, when you're trying to phrase these, is say for every single blank, and then you read off these. So for every order, there is one and only one customer. For every customer, there could be a minimum of 0 orders and a maximum of many. The asterisk says many. So that's how we read it. So the details about the customer's relationship to orders is right here. The detail about the order's relationship to customers is right here. So for every order, there is a minimum of one and a maximum of one customer. So in other words, each order is linked directly to one customer. There's not multiple customers. Now it could change. For example, here, by the thing that it says customers for every, this isn't saying this is a global definition. It is saying this is the definition for this company, for this business process. So what can we, sometimes you can infer something about it. So if you say a customer can have a minimum of 0 orders and a maximum of many, well, that means someone can be registered in their customer database before they've ordered anything. Now, if it said 1 to many, well, that would mean a customer has to have a minimum of 1 order and a maximum of many. That means in that business process, you don't enter a customer's details until they've ordered. Here, apparently you can enter a customer's details before they've placed an order. So perhaps you've done something else for them, or they've applied for credit or something like that. But with this details, with this information, you can say someone can be in the customer database before they've placed an order. On the many-to-many relationship, so for every product, there is a minimum of 0 orders. So some products they may have stocked in the warehouse, but no one's ordered it, or it could have a maximum of many orders. So for every order has to have at least 1 product and a maximum of many products. So what we're saying here, like another intuition of, or something we can intuit about orders, is that we're only selling products. We're not selling services. Because if we had a business where we're selling products and services, we could theoretically have an order that had 0 products and 1 service. But here, apparently, this business is only selling products. So in order to have an order, you have to have a minimum of 1 product. So I just try and give you an example of one to many and one many to many. Just make sure that you understand how to read them and how to kind of place it in your mind. Then when we start to figure out the tables used for these multiplicities, we have to implement the foreign keys. And basically there are two different situations. And that's why I have a one-to-many relationship and a many-to-many relationship. In a one-to-many relationship, it's straightforward. You place the, like here in the many-to-many relationship orders to customers, the one-to-many, you will place the customer ID, the foreign key, in the orders. There's no need necessarily to have customers order. You don't have an order ID foreign key under customers. So you would have a customer ID number, which is the primary key of the customer database, and it would be a foreign key under orders. If you have a many-to-many relationship like products to orders, you have to basically create something in between to create a one-to-many relationship. So for the orders table, we create a composition table called order items that shows the makeup of each individual order. The composition table that goes in between them to allow a one-to-many relationship is a composite of 2 primary keys. So in the order items, so under orders, between orders and products, you'll have a new table called the composition table, and it'll have 2 primary keys. It'll have order number and product number. And that allows for the relationship between product and order items is a one-to-many relationship, and then order items is a composition of orders. And so that's just basically understanding how databases work, taking the information that you've come up through the business process flow, creating a UML diagram, and then adjusting that UML diagram so it actually works with your database. Let's see. Chapter 6, this is going to be the purchases and payments. Again, this is going to be fairly going to be following basically what we did with sales and collection, purchases and payments, buying inventory and paying for inventory, at least in this simplified version. It could be buying services and whatnot. And this gets circles around accounts payable. So obviously, when we have cash disbursements to pay our AP, we can have purchase discounts, returns and allowances. Freight in is part of inventory purchases. So those are all the different types of accounts. The BPN activity, the business process flow, requesting prices and availability, place in a purchase order, receive items, record purchase, and send payment. What are some of the additional things that are introduced in this chapter about BPN models? What are lanes? These are to show different models within a company or within one participant. Remember, message flows are between pools. Lanes are within a pool. A gateway shows a business process flow that has a branching pathway. We look at some of the business rules, and again, we go through and I take some of these. If we look here, these are the business process. These are the business activities, the business process flow, and we have now separated them out. And so we've got, for example, I'm showing one here. We've got receive items. Again, the authorization says sort of what is the scope of the job and who is allowed to do it. Well, record the receipt promptly. Access control focuses on who cannot, what other activities can't the person receiving items do. The receiver cannot modify the PO in the system, and they cannot view the quantity ordered. In other words, that's a good one there, I think, actually. They can't view the quantity ordered. They're just supposed to report how many they receive. If they know how much was ordered, they could just not count it and just put that number in thinking, oh, it's probably good enough. So you want them to actually count it without knowing what was actually ordered so that you get a good accurate, that they actually do the job of counting on when they receive items. Application controls, again, it talks about what does the system do. Here the system figures out what the range should be and what the limits should be. You develop a UML structure. Again, we've got a one-to-many relationship and a many-to-many relationship. I have shown purchases and suppliers. So here we say for every purchase, there is one and only one supplier. So on one purchase document, one purchase order, we're not ordering from multiple suppliers. Every purchase will be coming from one and only one supplier. For every supplier, there may be a minimum of 0 purchases and a maximum of many purchases. So again, just like customers, you could theoretically have a business process where you don't enter suppliers into your system, where you don't enter them into your supplier database until you've actually made a purchase. But here, what this is saying is you can enter a supplier into your database before you've actually made a purchase. A many-to-many relationship, products and purchases. Well, you see for every purchase, there must be a minimum. I've kind of done it backwards here. For every purchase, there must be a minimum of one product and a maximum of many products. And for every product, there can be a minimum of 0 purchases or a maximum of many. So you may have some things listed that you will sell. That's a product that you sell, but maybe they're special order. So maybe you have some special order things that you won't order until a customer orders them. So you may have a product listed in your database that you haven't purchased yet from a supplier. Here's some extra details about doing the UML, and then you translate it into a database. The last chapter here is chapter 7, and so we call this conversion. So just go back to your managerial accounting. Remember we said that there's direct materials, direct labor, and manufacturing overhead. Remember the combination of direct labor and manufacturing overhead are called conversion costs because those are the costs necessary to turn direct materials into finished goods. And so it may seem like an odd phrase to call something manufacturing as conversion, but remember, sometimes manufacturing doesn't fit all activities. So think about this particular company. Okay, I guess you can be saying that they're manufacturing printed T-shirts, but that's maybe overdoing it a bit. I don't know if you want to say you're converting printed T-shirts, but it feels like a little heavy to say you're manufacturing printed T-shirts. Well, you're making printed T-shirts, right? And so because it's a conversion is just maybe more of a wider umbrella covering manufacturing and other type of conversion activities. Well, we develop a business process model. Oh, I also remember you've got the 3 linked inventory equations in this particular process. So there's a lot going on: raw materials, direct labor. And remember, GAAP requires absorption costing. So we need to be able to track these different types of inventory. Um, Here, the process is authorize production, issue raw materials, in other words, transfer to work in process, perform the work, which means add direct labor, direct materials, and manufacturing overhead, and complete production, which means transfer to finished goods. Understanding the model options, by now we've got most of the different types of options. And so now we're just talking about specific to this conversion process. What are the options you could do? So pools, message flows, lanes, some sub processes, etc., etc. Develop some business rules. Again, we take some of the business process flow and we take some of those activities, and I record the authorization, access, and application for each one. So perform the work. What is the authorization or the scope, or who's supposed to do it? Well, the scope of work is that the direct labor costs get recorded accurately. Access controls, the people performing the work cannot modify production authorization. The people doing the work can't be the ones that authorize the production. And then application controls, the system issues control numbers, tracks hours. In other words, what is the system doing to kind of maintain control? Again, the last part is, what is the UML structure? We've got a one-to-many and a many-to-many relationship. I've taken raw materials transfer by an employee. So for every raw material transfer, taking it out of raw materials inventory and bringing it to the production floor to work in process, there is one and only one employee. Each employee may fulfill a minimum of 0 RM transfers and a maximum of many RM transfers. On the many-to-many relationship, we have raw materials and RM transfer. For every raw material transfer, there must be a minimum of 1 raw material and a maximum of many raw materials. Every raw material will be transferred. That probably needs 2 R's. Will be transferred a minimum of 0 times and a maximum of many times. Okay, so that's chapters 4, 5, 6, and 7. And basically, it is covering the last part of the business process mapping process, starting with business process diagrams, coming up with business rules, putting them into UML diagrams, and then how do you fit them into relational databases. And we covered that 4-step process. We covered 3 different business processes: sales, collections, purchase and payments, conversion process. Okay. If you have any questions, let me know. The exam is coming up soon. If you have any questions about the quiz or the exam, please let me know. Otherwise, have a good day.